JM Financial, Nuvama Wealth, some of these other stock market ancillaries too, fairly active in the trading session right now, Aisha.
Oh yeah, absolutely. Just taking stock of some of the other buzzers in trade. Bandhan Bank, like Anisha flagged off, is now up a good 10.5%. There's Nalco, there's Persistent, which is higher by 4%. Exide is looking good by about 3.6%. Lots under pressure as well. Cummins, Crompton, M&M, DLF, they're definitely sliding a fair amount as we speak right now. But let's quickly take it across to our experts and find out how they're wading through the market volatility and the weakness that is now trickling in. We've got Deepak Shenoy with us, Kunal Bothra, as well as Naresh Mirani too. Naresh, hi, afternoon. Let me just quickly come to you. What is it that you're making? Because again, one is seeing a bit of a cool off, especially led by banks. There's HDFC Bank, ICICI, Axis, all of them slipping. TCS, of course, was the weakling from the word go.
So we continue to see flip-flop moves. Say yesterday it was pharma taking a dip and banks doing well. Today it is pharma not taking a dip and banks taking a hit. We continue to be range bound, not breaking 24,700 to 800 band clearly tells you we are forming a base around this area. 25,400 is the short-term resistance. So we could stay in this range going forward. The good part is the broader market is not taking a downtick. The breadth is much better in the small cap and the mid cap space. So continue to see more stock specific action, and that should be the trend going forward, at least for a week or two.
Action, and that's what we are witnessing. But the headlines are not only coming from the equity world, a lot happening in commodity and money market as well. For commodities, there was that bounce back that happened in the crude prices overnight, so that continues to be fairly volatile, something that we are tracking very closely. 78.5 is where Brent is right now, and rupee of course breached that mark of 84, further weakening coming in there. So that of course is the other headline to track. But Deepak, what are the things you are tracking in the market? Earnings season has kick-started, and if TCS is anything to go by, doesn't look like you should wait by and watch out for any more surprises at the moment.
Yeah, I think Anisha, the early part of results is coming in. So I don't know how the whole result pack will pan out, but I know that there will be some surprises in certain areas, specifically in companies which depended on a lot of the government decision-making machinery, which was paused in the June quarter and has possibly come back in the September quarter. So you're going to see some of those companies start to do better. There has been a slightly better monsoon, so I expect a few companies like two-wheelers and all that to start at least showing some signs of better results. And in general, I would say the export market, especially IT exports, I don't think they're going to do that well because of the incoming US elections later this year. And I think all major decisions will probably happen after that date because there's a lot of talk of how government will change based on which person becomes president. So I think we'll just have to wait for that part of the market to evolve after the elections.
We'll wait for that part of the market to evolve. But Kunal, what's your sense in the market? While there's no selling pressure as such, there doesn't seem to be an interest in buying either. Would you say till the time of at least, let's say, Diwali or next big trigger, we are going to be fairly range bound and we're not inching towards the 25,500 in a hurry?
No, I don't expect the range bound nature of the markets to be prolonged. I probably believe that it's just a matter of, I think, maybe another few days, another week or so before the markets get back into a zone where if the global markets continue to show signs of strength, like what we've seen for many of the global indices, the US market specifically, then I think it's bound to be that our markets would probably want to get back onto its feet very, very quickly. So I would probably believe that the nature of consolidation or the time band of the consolidation could be very short-lived. My expectation is that if the large cap stocks which have been seeing some intense selling pressure, if the selling abates into these large cap names, say in another couple of days, then I believe that the comeback could be much more stronger sooner for the indices. So I believe that this could be a good opportunity to try and initiate few longs, and especially if there is minor, more minor dips on the indices going forward.
Right. Deepak, what is it that you've done in the last month or so? Curious to understand whether you've eased off anywhere or maybe even added on the weakness.
Aisha, to be fair, I think we haven't. We've kind of decided to wait till results come in before we take new positions. But we have increased stake in a certain set of positions we already had. For instance, LIC, after it dipped below 1,000, has been an addition for us. We've added a few more in the large caps, including L&T and Reliance. We have some of the smaller caps where, it was difficult to take new positions because they were just, going up significantly. But wherever there were opportunities that came in when the markets corrected a little bit, some of those positions have kind of been something to add on for us. Um, we are more interested now in whether the results throw us more opportunities because some of the elements we thought were happening or were going to happen in the past have started to happen, whether it is electric vehicles, some layer of consolidation there. There is more efforts that are happening on the battery manufacturing spaces. There is some more movement on PLI and perhaps actual focus on the results. The September quarter gives us a balance sheet, whereas the June quarter gives us only a P&L. So the balance sheet can be actually used to figure out how cash flow is moved as well alongside. So I think it'll be an interesting quarter based on results. So still waiting. I haven't picked up any new stocks recently.
What's the view on Cummins if you're tracking that one closely, or industrials as a whole, Deepak?
We haven't had Cummins recently. We've got, of course, I'm big on industrials. I think the whole industrial manufacturing sector is going to change quite dramatically in the next few years. Two reasons for that. One, the world is becoming a silo in the sense that every country wants to set up more and more manufacturing arms for its own consumption, more rather than depend on imports from, say, China and stuff like that. Every large countries, and in that process, some of the elements for India work out to our favor because we have a very large consuming market. The second one is the government focus on or impetus for PLI and other areas of manufacturing, which make it more difficult for someone to import versus manufacture. It's just marginal, but the difference is palpable over time. So you will find that a lot more of the manufacturing, and therefore the companies that do B2B in the manufacturing space will see a significant uptick in the next 5 years. Now, whether Cummins is going to be a significant part of that going forward, because part of the say auxiliary power generation comes in from Cummins for the domestic consumption itself. I think that is a thing to be to wait and see. But I haven't seen their numbers recently, so I don't have a handle on the company itself.
Deepak, PSUs as a cluster and specifically the entire defense, railways, shipyard theme has seen a fair amount of correction, along with the rest of the market, about almost 20 to even 40 odd percent in some of the cases. Having said that, I was just taking a look at a Mazgaon dock, for instance, today. They've bagged a sizable order from the Maharashtra State Power Generation Company. Would you be looking at this particular space in terms of the kind of earnings that they come out with? It's been fairly ignored for the last 6 odd months. Maybe deploy some on declines?
Absolutely. In fact, Aisha, we own Mazgaon Dock, so very biased on that front. We've owned it for a while. We paired positions above 5,000 because it was getting a little too big for our portfolio as a size. But overall, I still continue to maintain that there will be a significantly higher growth in this sector and for the company itself. Simply because the scale of operations today versus the scale of operations even as a percentage of market share in the next 5 or 6 years is going to be so much higher that I know we're paying a lot of premium for a PSU company operating in the space, but it's not meaningfully higher. And I would rather, honestly buy this than say the FMCG giants of like Colgate or Nestle, where you're paying 60 times earnings for a 10% or 15% growth. Here you're paying about 37 to 40 times earnings, but the growth can be significantly higher. I understand there's a PSU tax, so you will give a little bit of discount to it, but I think the orders in this space move primarily to the PSU players because that's where the defense establishment is more comfortable, the government establishment is more comfortable before they, go down into private players in this space, and there are not many private players in this space. So there is that as a potential. I think you should expect 40%, 50% corrections in this space regardless. this is not a market for beginners, honestly. So it's going to be like, it's going to take you, you have to keep your position sizes to a point where you can handle this kind of volatility if you're targeting such stocks, because things can move really fast and against you, and you have to have a plan of action to act. So I say 40% is normal, but yeah, maybe 60-75% is bad. That would be my bigger concern. But this stock seems to have been okay, just 40% down and then back up a little and so on.
Okay, so willing to pay and get along the PSU tag because there is growth in the defense story and maybe better plays than other than the other FMCG giants. That is time for a short break, but don't go anywhere. On the other side, we'll keep tracking market because there is a bit of a perk up if that's something to write home about. It's Bandhan Bank, Triveni Turbine, DB Realty, JM Financial, BSE. These are your big movers. We'll track all of those when we come back.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.